this will be my my first entry pretty much. All right, and of course I'm targeting the midpoint. Now there is the new week's opening gap there. There's also this relative equal low that's sitting here. But for the time being, I'll be targeting the midpoint from there, and then depending on the reference in time, then I'll go ahead and take it from there. But let's go back down to the, oh yeah, it's the order block. So it went up there, tapped this order block, rejected lower. Let's go back into the 5 minutes now. Now for the 5 minutes, let's see if the relative equal lows. All right, so there's also relative equal lows here, which is really nice. Been tapped into the trade, and I'll keep this one here. Let's go to the 1 minute. Okay. All right, so let's go ahead and focus up on this trade now. As I mentioned earlier, this is a pretty typical setup. No high impact news, but a medium impact news, meaning that I'll be looking for an entry into the midpoint of the opening range right away. So if it's the case where there was like other conditions, of course I would have waited on 950. And if this is to fail, for example, right, what I'll do is I'll look at the 950 to 1010 macro, and depending on how, and then at that point I'll exercise a lot more patience in regards to seeing exactly how the market is reacting off of the first presented FEG or a certain PDRA to pretty much confirm what the market wants to do. So right now the market is wicking on the midpoint of this here, which would function as a gap. What I want to see is that the market breaks through and aggressively close below it to show that I'm on side, and it's still rejecting off of it, which is not something that I honestly want to see. I want to see it close below it, but this is delayed data, so it'll happen from time to time where you're not seeing the information reflected. But or even if it doesn't close below it, like say that I almost went fully into my Jamaican accent there. So say that the market doesn't close below it on this specific candle wick here. I would love to see like the follow-up candle be like a huge displacement candle below this low, for example. Let me see if I can pull over this order block right here. So this is the 15. There we go. So that's what I'm talking about, right? No. Okay. So so the, what was I saying? Yeah. So this is the 50 minutes order block, right? And even though we're not using it as an entry per se, even though we're not using it as an entry per se, we can still use it to frame the narrative, right? Because there is the midpoint here, and then there's the 15 minutes breaker here. The market tapped into it, rejected lower, used the first presented FEG. And, right, this might be a bit of greed on my end, but normally, even though the midpoint is the initial target, I'll treat it as such in regards to like moving my stops and break even or something along the lines. But I do believe that it is possible for the market to reach into the cluster of like new week's opening gap and new day's opening gap, like down here kind of thing. But ideally, like something like here would be the correct target to choose. It's like this is 70. Yeah, 70 compared to 60 is not really that impressive. We'll see. And right now the market has successfully tapped into a breaker. Let's see if it actually closed below it. No, it hasn't. So we'll be using this entire area here as the breaker. Bearish breaker. There you go. This entire area. So you want to see it close below it and then continue down into this area. And with all these wicks in here, let me see if I can do a measurement here. So for these last 2 weeks, it's something I saw ICT did. And of course, I'm not gonna add every new tricks and trade to my trading strategy just because ICT did it, but it's just something to pay attention to. So these last 2 weeks here, this is where the midpoint is. So if this is just theory, because there is a volume imbalance here as well. So the market can be just using these wicks right here. And before, I would have panicked out of this trade already, in regards to, yeah, so that's in volume imbalance that I tapped into right there. Before, I would have tapped out of this trade whenever I saw this kind of movement, because I believe that I need to get this in break even because the market retracement. So pretty much I didn't allow any kind of retracement at all. I was always paranoid because the idea that I had is that I really need to get this win because when I get it right, I don't get anything out of it. So I really need to get this win. So I can, even if it's not a win, once it's not a loss, then it's fine, kind of thing. So volume imbalance here, tapped it, ran back into here. And then there's another volume imbalance there. And then inside here, there is, because if you look at this run, there's a lot. So right where my entry is also a midpoint of the wick that was created. Let me measure this one as well. There's a lot of imbalances, right? I don't know if I can thicken. Yeah, I'll thicken it. Where's the other one? Is this the one that was thicken? Where's the other one? There it is. Thicken it. There we go. So there's just like a lot of imbalances in here, a lot of gaps. So having the market trade back and forth into it is perfectly fine. Now this is where painting the narrative is important, right? It's coming into 950 right now. So things change whenever it goes into the 950 macro, because it's in a point in time where the market shows its hands completely, right? So meaning that if it's going to go lower during this time frame, the direction that the market intends to go in, it picks that direction and it aggressively runs in that direction. So for example, if my call is correct and I'm anticipating that the market is going to go to the midpoint here during the 950 macro, there might be a retracement, right? But then once the move actually happens, it's going to be a very aggressive run to the midpoint. Or, for example, say that I am offside and the market just wanted to take out this low, right? And it actually wanted to go for the relative equal highs or yesterday's high, right? During this time, this is where the lessons that I mentioned earlier and like the key takeaway and the main thing that has bolstered my confidence will actually take place. Because once the market, if it's the case where the market trades and close above the first presented FEG, right, that would not signal a buy or a sell for me immediately. But what that would do is to allow me the time to pay very close attention to what the market wants to do next. So for example, if it trades into the first presented FEG, close above it, use it, and then rejects price higher, there is a lot of PDRAs, because at that point you'd have validated that the price is actually looking to run higher instead of lower. And with that, there would be a lot of PDRAs that I can use in regards to take an entry in there. Because from here to here, let me go ahead and do a quick measurement here. Let me zoom up the screen a bit. So from here to here is 79 pips. The market tends to run at least, say 150. So let me go ahead and highlight here daily, because if the market does want to do this, I would daily biceps there. I would conclude that it actually wants to just run for the daily biceps. All right, let's get back down to the 1 minute, right? And let's do the measurement. All right, so if the market wants to run from, let me zoom it so I can actually get it in there. All right, so if the market actually wants to run from here, where is, oh, there it is. There we go. So if the market actually wants to run from here to here, right, that's 180 ticks. If I'm to use a PDRA that's slightly above here or even up here, that will still allow me a decent trade. So I'm not in any kind of rush to actually get into those kinds of trade. And as I mentioned earlier, this is the macro chipping in and the market is looking to run lower. So I said before, I am going to be, let me close this off, a bit greedy here. Of course, I can always make adjustments. A $20 difference still. I think after the market like runs to the midpoint, I think I'll actually just wait and see what happens from there, because it's not like unless I'm anticipating that the market will get down here instead, like all the way down here for like $100 trade, right? I think this is the only time that it really makes sense for me to hold a trade. Yeah, I think I'll do that, and then I'll just see if the P areas match it. Right now, this can either create an FEG here, or it can come all the way back up here into the breaker. No, it's actually just creating an FEG. Let's go ahead and highlight this. Bearish. And then for the breaker, I honestly just want there to be a line so it doesn't clutter the chart. You can let me know in the comments if you're the type of trader that's picky on how your chart looks, or if it's the case where your chart doesn't look a particular way, if it bothers you. I'm 100% that type of trader. Like if my chart is messy, it actively annoys me. So I don't like when my chart is messy at all. All right, so the market just went close above this FEG. Pretty typical. There's a wick right here, so here's where my attention is now. And there's also a volume imbalance here. I'll just make it gray. And this is unfortunately like a high resistance run to the midpoint, if there's going to be a run to the midpoint at all, because typically the market would have already ran there like quite aggressively. But let's see if this is just a high resistance run, or if the market is just looking to reverse entirely. Like in the 950 macro, I wouldn't want to see the market actually trade back into the first presented FEG. So I'll just cover my stops here. If it's the case that it rejects off of it, I'll simply just use another PD rate to get in. But seeing this displacement lower, I don't want the market to be coming back up here. It already traded through it once, went up into it again, traded into the lower quadrant of this wick, traded into the midpoint of this wick, created this area, trade up into this cluster of wicks right here. It should not, I don't believe that the market should actually be looking to go back up into the first presented FEG. If it does, unlike trades away, then I'll just, of course, use another PD rate to get in. But for the time being, I don't believe it should actually travel back up there. So pretty much we're trading to the opening range gap using the first presented FEG here. After the 950 kill zone, the market displaced lower. I don't want to see the market return back into the first presented FEG, because I believe that at this point it should not be returning there. So if it's the case that it does trade into it, I'll be looking for my stops in break even, which was just triggered right there. If it's the case that it's going to reject later from the first presented FEG, then I'll just use another PRF after it's confirmed that it wants to use it to go low.